We have a lot that we're trying to cover today. Thank you for joining. My name is Andrea Armeni. I'm the Executive Director at Transform Finance. And I am delighted to welcome you and our speakers for today for this third session of our discussion series on grassroots community engaged investments. Today, we'll cover this topic of funding a movement, in particular looking at how philanthropy has and can support grassroots community engaged investments via grants and investments, PRIs, as well as MRIs and other de-risking mechanisms. I am joined today, I'm very excited about the speakers that we have lined up for you, by Maca Agbo from the Kataly Foundation, Greg Johnson from the Rockefeller Foundation, and Jeff Rosen from the Solidago Foundation. So it's sure to be an interesting discussion with three complementary perspectives on the work that they have been doing around grassroots community engagement, power, redesigning and redefining the economy. So before we turn over to Nwamaka, Greg, and Jeff, I was going to re-ground us for a moment in what we have been covering so far. For those that might be joining us today for the first session, for this session, you can find the recordings of the previous ones, as well as a write-up at Transform Finance on the website. But just to get us there for now, let's just cover quickly what is grassroots community engaged investment. What do we mean by this thing? It's really a process and a practice. It's not a separate field of investment. It's really a layer or an overlay for all sorts of flows of capital into communities that seek to give input, decision-making power, and ownership to grassroots organizers and to grassroots community members. So a variety of stakeholders that are reclaiming the possibility of having decision-making power over how capital affects their communities. This can be across a variety of capital flows. It can be around enterprise financing. It can be around housing or commercial real estate projects. There's a lot of innovation out there. The common factor for all of them is, again, that they are somewhere on a spectrum of engaging communities and giving them the possibility, the opportunity to build power and to be in control of their destiny and how they want to shape their communities, their needs, and their aspirations. So,
I was going to order Hillary a new card with her name on it because.
There we go. What we have covered so far in the prior two sessions, again, are two quick things. One is that GCEI as an approach seeks to build power in place, power in communities, and matches up well with having an equity lens to investments, right? Actually, for the funders and investors that care about equity as an approach, is one way of putting into practice that approach. Actually, abiding by what we always say is the motto that came out of the disability rights movement of nothing about us without us. And it also helps the projects succeed by having buy-in and benefiting from all the expertise and knowledge of the communities and their members. Now, this is not traditional investment in any way, right? There's an attempt at building the new, at really redefining who wins and who loses and who gets to decide. And as such, it can't really thrive without that initial philanthropic support and the support of investors who are not simply looking at conventional risk and return parameters. So GCEI projects, by and large, all tend to receive some form of support from philanthropic funders. And these range from national foundations You might have seen, you know, Ford and Kresge moving in this direction for a while, again, along a certain spectrum. Community foundations that are a natural actor in this space, given their interest in place, and progressive families, family foundations, and family offices, both on the grant and on the investment side, such as the Libra Foundation, that have been very active and might come at it from the lens of economic justice and economic democracy. And in fact, we see that besides this kind of structural difference that there might be between national foundations, community foundations, and family offices, there is also a difference in the approach or what brings them to GCEI. Some of them come at it from the perspective of kind of community development and sort of place-based interventions. Trying to drive capital where it has historically been absent. Others come at it, and we'll explore this, especially this overlap this clear overlap that there is between grassroots community engagement in investments and racial equity and the efforts to eliminate the racial wealth gap. And lastly, as I said, folks that come at it from kind of an economic democracy, self-determination, community power approach, which maps well onto the goals of the projects themselves. As we saw in session 2, there is a variety of goals even for the GCEI projects out there. Some are looking more at wealth creation. Others are looking more explicitly at building power in communities. And we see the same dynamic in among those that are funding the projects themselves. Okay, so what tools do these philanthropic funders use? You mentioned grant funding, very much needed, especially in order to support the initial development of projects, but also the ongoing needs of capacity building, technical assistance, the structural needs of projects that have, let's keep in mind, historically been excluded from finance. So there is not an expectation that folks that come from the organizing background or from a social justice, racial justice angle would need to have a priori all the knowledge for how to carry out this project. So that's why oftentimes we see grant funding to get these projects underway, but also because unlike most traditional investments, these are not first and foremost attempting to be self-sustaining and profitable from the get-go, right? If you have a $100 million fund, you might be able to use the fees that are charged on that capital in order to support your infrastructure. If you are a community-based, much broader group with $5 million, chances are you will need a bit of grant funding, at least until you get well underway. And then, of course, foundations can play in this space through their program-related investments, mission-related investments, depending on how they think about that part of their portfolio, such as with investments or notes that they put into these funds and these efforts, or with the purchase of assets, especially around real estate, coming somewhere in the capital stack for that. And then they play very important non-financial roles that I would love for our speakers to get into with us, as conveners, as initiators, as connectors among different projects, and really building out a bit the infrastructure that brings together all the experimentation that we're currently seeing in this space. So with that, I will turn it over to our panelists for today. For those in the audience, again, feel free to turn your camera on, stay on mute. And if you have questions or comments, please feel free to drop them into the chat. And if you would like to ask something directly, you can ask to come off mute and we'll take you off. And that can be depending on how the conversation goes while our three speakers are chatting, or afterwards there will be time for a rich conversation for all of us. So I will stop sharing the screen so that we can see our speakers. And again, I want to welcome Jeff Rosen from the Solidago Foundation, Greg Johnson from the Rockefeller Foundation, and Maca Agbo from the Kataly Foundation. Thank you all for being here with us today. Okay, so let's start by asking you a bit of an open-ended question. Why don't you introduce yourselves briefly, just your affiliation and what brings you to this work? What has been your interest in furthering grassroots community engaged investment? Jeff, we can start with you.
Sure. So thank you, Andrea. So my name is Jeff Rosen. I'm the CFO for the Solidago Foundation. I've been with the foundation for 18 years now. And unlike a lot of my other colleagues, I inherited a position that already was focused on allocating endowment assets to align through the investment cycle with the grant making. And so I'm a longtime PRI, MRI maker, going back far enough that the term impact investment really hadn't been codified yet. So that's kind of like a recent innovation from my perspective. And Solidago is a longtime funder of grassroots organizing power building groups. And in the early years, 2003 to 2009 or so, it was very hard to align our impact investing efforts with our grant making. And so I really came to the work post-Occupy movement, where we found ourselves much more closely aligned with the work that the grassroots organizing groups were doing, and found opportunities through their work to begin to line that up with really like whole-scale infrastructure building around the impact investing portfolio. So that's what brings me to the work. I'll leave it at that and turn it over to Nwamaka.
Great, thanks, Jeff. Hi, everyone. My name is Maca Agbo. I have the pleasure of working at the Cataly Foundation as the CEO of the foundation, and I'm also the managing director of our Restorative Economies Fund. And I just want to say it's nice to see so many friends from Philanthropy, from the Just Transition movement, and many other social movements engaged in this conversation. So I hope to see you all active in the chat box. But to start off with your first question, Andrea, about what brings me to the work, I oftentimes joke that philanthropy wasn't on my vision board a few years ago. And so I feel really fortunate to be able to be the founding CEO of Cataly, a foundation that was birthed with the intent to spend out, and to spend out in an intentional way in which we are reinvesting our assets, our resources, into community wealth building projects. And so for us, we have three program areas under which we do this. We have the Restorative Economies Fund, which is an integrated capital fund designed to move non-extractive investments to support community wealth building projects. And hopefully we can unpack all of that jargon as we move through our conversation together. We also have our Environmental Justice Resourcing Collective that is led by 9 women of color environmental justice leaders that are doing grant making with a $50 million grant fund. And then we also have our Mindfulness Healing Justice program, a program that's focused on supporting Black, Indigenous, and communities of color and getting access into the mindfulness and contemplative practices and supporting social movements and integrating healing justice into their organizing strategies. And so I lift all of that up to say, for us at Cataly, we really leaned into this work with a deep understanding that those that come out of a lived and movement experience are those that are well positioned to make the decisions and set the strategies. And so we have a program team and a leadership team that comes out of a lived and movement experience from doing this work on the ground. And that's important to us because we really want to lean into an understanding of what is needed to make these projects succeed rather than playing risk adverse. And so being able to have a team that's able to lean into the hard and challenging questions with the spirit and with a stance that we are going to commit to support these projects. And so happy to talk more about our work of the Cataly Foundation, and yeah, excited to be here. I'll pass it off to you, Greg.
Thank you, thank you, thank you. Thanks to everybody who organized, to the fellow panelists. I'm really excited to be with you all today. My name's Greg Johnson, Managing Director of Equity and Economic Opportunity at the Rockefeller Foundation. By way of quick introduction to the Rockefeller Foundation, we are busy fighting for all of humanity to rise using innovation, not just some of it. In the US, our focus has been on making sure that every working person can make ends meet, have bread to eat and to spare kind of thing. So using the levers of public policy and private investment to try and get that done. My personal trajectory to where I am now is having been a community organizer, from community organizer to community lawyer, and from community lawyer to community practitioner of philanthropy. The reason that I do this work has been demonstrated across the trajectory of my experience. Is just, quite frankly, my experience and my belief is that the educational, economic, the political, and the cultural and spiritual systems have to align and be dealt with in an equitable way to allow just open opportunity and equal access to the fundamental tenet of a free society, that is life, liberty, the pursuit of happiness. And so happy to talk more about our work democratizing financing and capital to enable Black and Latinx and women-owned businesses and assets to grow and their families to have a cushion for income and expense shocks. And we do that across using a three-pronged approach: implementation around providing culturally competent and localized technical assistance, capital provision, which is around seeding and accelerating novel forms of capital and credit for those populations of people, and also doing our work around anti-discrimination and coalition building. We're place-based, our work on asset ownership, and we want to make sure that local and national Black and Latinx and female small business leadership networks are supported, established, and able to hold accountable the systems, public and private, who have an impact on their lives.
Great. Thanks to all three of you. And maybe I'll pick it up with you, Jeff, and then I'll let you all riff. So historically, as I remember, you came into this early days with the experience of the Pioneer Valley Growth Fund and some of the experiences there around the role that communities were or were not playing. It seems to me like there's been a lot of evolution since then that probably touches into the overall trend of decolonizing philanthropy and stepping into considerations of power that historically were not quite part of the philanthropic discourse. How have you seen that evolution? How have you seen the field continuing to develop there?
Yeah, I mean, I think the first comment, Andrea, is that hindsight always looks linear, but I don't feel like any of us who've been in this space feel like we took like a straightforward direction. It's always with, fits and starts and turns, because it's been a co-learning experience, right? So, for Solidago, we came to this work trying to figure out a way to deploy more resources. Like a lot of other people too, I'm a relative outsider to philanthropy. I never envisioned it on my whiteboard either, even though I've been here 18 years now. And so I didn't understand why you wouldn't look at all of your capital, all of your charitable use assets to line those up with a strategy to achieve your mission outcome, right? Like, so I didn't understand really the dividing line, and I was fortunate I worked for a foundation that didn't. And so, we're in an inclusive economy space, we're doing economic justice work, but we're working primarily with grassroots organizing groups. And so the first set of efforts following on Occupy were in the food system work. So PV Grows was a food system infrastructure building, trying to answer the question, why can't local farm and food enterprises find the right kind of capital? And secondarily, why can't communities invest in their own community, right? So in the Pioneer Valley in Western Mass, we had a very strong movement already around local food. As a smaller funder, we could be place-based, but we couldn't even build a movement. We were fortunate to inherit an existing movement that was really ready to invest in the local food system, but just didn't have the infrastructure to do so. And so as a longtime grassroots organizing funder, we also were interested in long-term infrastructure and capacity building. So we did that work to stay in place and stay committed from, it was a 5-year plus project to really go from drawing board, developing partners, to actually having a term sheet that people could sign off on. And then another 5+ years where the community has continued to iterate and change. And then secondarily for us is when we got involved in the Real People's Fund, where Maca was one of our really core voices that kept us focused on mission and the power building aspect. So it wasn't just about bringing capital, but it was about what's the strategy that's around organizing and power building where the capital is in service. So we weren't really interested, you mentioned earlier, Andre, around like economic development strategy. That was not our priority in the Real People's Fund. It was really, how is that a tool for power building and working with other people to look at what that would look like and how differently that looked, where it's really community-based organizations leading the discourse, creating the structure, and ultimately, in that case, governing over the capital. So the model changed over the years when it went from really trying to fill some capital gaps, trying to figure out some of the questions that people from Occupy raised. Why can't I invest in my local community? Why is that only for accredited investors? Some of those, economic democracy issues. And then we transformed that and much more closely aligned with our historical grant-making priorities to create a strategy that was really based on using capital as a tool for power building. And again, there's 100 little details, nuts and bolts details that go into each of these implementation pieces. And it's great that there's now a shared community of practice so we can take up from one another and pick up the learning. But in the earlier days of this work, it was a slog. It definitely wasn't a straight trajectory. It took work and persistence and that long-term presence, like you said, Andrea, for the funder to both convene and then continue to fund the people who engaged in the work. I think, philanthropy has to recognize the value of all of its stakeholders and particularly grantees to be paid for their time. So I'll leave it at that. Turn it back to you, Andrea.
Thank you, Jeff. Yeah, and I think we should really try to lean into those nuts and bolts or how this work actually happens. But before we do that, I want to turn the same or a variation of that question to Nwamaka and to Greg, coming from these different perspectives as to where you see the field moving. Maca, I think it's fair to say that Katali is kind of at the vanguard of thinking about power and restorative economics. So maybe you have one view on the field, and Greg, coming from one of the really major national foundations, might be seeing the developments and the path that that this work is taking a little different way, if you both don't mind addressing that.
Sure, I'm happy to jump in, and Jeff, thanks for just kind of lifting up some of the previous work we did together, because I think it speaks to even the moment, even having Kataly as a foundation right now, we know that we sit within an arc of other foundations that have also been experimenting and doing this work. And so when I think about not only Solidago's leadership with Real People's Fund, but also the work of Chorus Foundation and others that have been really raising the questions of how do we meaningfully move our resources into vehicles that build the capacity of grassroots communities on the ground to govern, and not just to govern those resources, but to therefore also have the capacity to continue to contest for power and shift material conditions on the ground. And so when I think of what brings Kataly to this moment, it's with a deep understanding around that we need to be specific and targeted around who we invest in, what we're investing in, and how we go about making those investments. And that we need to structure our foundation accordingly, meaning that we can't privilege or prioritize our own perpetuity or performance of our endowment over what we know is needed out into the community. And so because of this, we were founded with the intention to actually be a spend out foundation. And what that means is it allows our team the flexibility to move capital, to move resources to our grantees in ways that our measure of success is not indicated by the returns that we're receiving back to our endowments, right? Our measure of success is determined by Are we generating community wealth out in grassroots communities? Are we really supporting communities to build power and have the economic, political resources that they need to build self-determined lives? And so for us, we're clear that being able to structure our foundation, being able to provide our team with the flexibility, and also being able to build in mechanisms of accountability where our practitioner funders, our program teams who are in direct relationship with grassroots communities are able to engage and get feedback about our grant making strategies, our priorities, where we're actually able to have people meaningfully hold us accountable to really fulfilling the mission of our foundation. And so for all of those reasons, I think, and because we sit in an arc of this work, and because we're also able to be here due to the work that social movements have been doing on the ground, right? Really leading the call and the demand to figure out how we unlock access to capital that we know these groups need, and to be able to do that in a meaningful way. And so we're only able to be where we're at the moment that we're at because of so much of the work that other social movements and other foundations have done before us. And so if I could, I see Carrie's initial question in the chat box, just to speak to it around this piece on systems. What this speaks to is that it takes a long time to build the capacity to shift the conditions to then meet the movement moment where groups are actually able to unlock the capital. And so for us as Philanthropy, I think recognizing that organizing is and will always continue to be the basis of shifting to conditions on the ground. And that's why we need to continue to fund grassroots organizing, movement building groups accordingly, so that communities can build the capacity, and so that we as funders can then continue to find ways that we move resources meaningfully to those communities, so that we can meet the movement moment. And so this once again just speaks to the long-term patient capital that we know is needed to support communities, the non-extractive, or also known as concessionary investments that help to close the racial wealth gap, but then also the grant dollars that we know help to build capacity, provide the technical assistance, and really support communities in moving out of the red and into the black on their business projects and on their cooperative initiatives. And so, yeah, I think I got it all in. I'll pass it to you, Greg.
Thank you. I don't know that I have a lot to add. So much has already been shared that's powerful. I'll borrow a little bit from Jeff, whose language was that hindsight is linear. Where I'm from, a farm in Mississippi, we say hindsight is 20/20. And the goal is to turn hindsight into foresight, right? And to try to get things right. And I think that building on what's been said here is that when we think about achieving a system of accountable governance, whether that's in political systems, educational systems, or economic systems, if we're going to get to accountable governance, then we have to bundle the power sticks that people hold individually into institutions that can enforce what is in their best interest. So to make something happen or not happen. When the foundation was considering how we would enter into this space as someone who's newer in the asset ownership space, particularly working with growth stage small businesses, is that our goal is to unleash the full power of catalytic capital to unlock private sector investment at scale, right? Because success for us is getting it right in the 12 communities where we're starting this work, but being able to replicate to scale, or to do this in a way that reaches critical mass so as to have a real impact on the gaps that we're seeing across our communities. And so to do that, we thought about doing three things across the spectrum of work that we're doing. One is to just leverage large institutional commitments to expand sources of capital in a time when lots of commitments are being made toward closing the racial wealth gap and to creating equity for Black and Latinx and AAPI and other underserved and traditionally, historically marginalized communities. The other part of our work is around building access to scaled ownership. And we have to do this through supporting innovative models to increase access to ownership and scale BIPOC businesses. We think of this as a catalytic role that RF is playing at the pivotal scaling phase of most of the projects that we're in. And then the other part of why we think that this work is important, particularly around community governed capital, is because the glide path to stabilization and growth for most small businesses, which is again a critical lever in closing that racial wealth gap, is for small ticket products like between $50,000 and $250,000 that too few people are meaningfully addressing. And what we do see that there's a lot of momentum in the field of these community-based organizations, of these grassroots community engaged initiatives that are thinking about that glide path that needs to happen for that $50,000 to $250,000. This is one of the greatest opportunities to achieve meaningful outcomes, particularly as it relates to closing the racial wealth gap in this moment. But it is still seen as somewhat innovative, right? And so we need to talk a little bit more about demonstrating what success is, naming what the KPIs look like in that sense. But it also responds to the needs of BIPOC small businesses and fills the gaps that peers are not engaged in. The financial services industry is failing low wealth people across the board without regard to race, but it is particularly failing Black and Latinx and API folks. So we stepped into this space, to your point, as the foundation who introduced impact investing at the Bellagio a few years ago, right? To say to some of the folk in the private sector that here's another opportunity to do some really critical impact investing that will help to close the racial wealth gap. And we think that we've identified some models through our investing. Some of it we've discarded, some of it we're going forward with, and we'd like to invite you to join us in this because we think that this helps us, again, not only close the racial wealth gap, but also help us to achieve a system of accountable governance in the communities where our folk live, so as to, again, hold the systems, the structures, the elected officials accountable to their needs and interests, whether it's political, educational, economic, or cultural. And we think that that's important.
Thank you both, Nwamaka and Greg. And let's lean into, Greg, what you were saying for a second, because in some way we've set ourselves up here with, an audience of folks that are already bought into this approach. Otherwise, they probably would not be joining a transfer finance webinar, and free speakers that clearly are on board with many of the concepts that are coming up. And yet I imagine that for the private sector impact investors that you mentioned, but also for a lot of the other foundations that have not yet jumped on this ship, there might be some barriers, there might be some challenges, right? Have you, Greg, and also Maca and Jeff, have you identified any? Do you have a sense of what these barriers are? Why others haven't joined this approach? Like the very notion of contesting for power might be a little bit, foreign or challenging for some, or it might be on the technical side. So can you share with us a little bit where you think there are limitations for the field and how those could be addressed?
Sure, I'll quickly jump in and just say that I saw the chat there, and it said that philanthropy is always saying that they want innovation, right? And I think that is a very valid critique, and I'll say less about that because, for very selfish reasons. But I think that the lessons that we're learning is that one of the critical things when we're talking to folk with private capital about making a catalytic investment is that they need us to socialize these concepts with them more, right? They need more education. So I call it organizing philanthropy. And in the same way that you might have an investigation and education phase of any other campaign that you were doing for any other social impact issue, we need to do a lot more of the education and investigation, particularly with philanthropic associates and with those who invest private capital. I think that's important. I also think that that as you think about executing on what may be seen as a complex mandate, that there's some essential capabilities for catalytic investors that they're looking for. And this sometimes is challenged by the notions of communities as not being experts, right? But we can have a conversation about how expertise is developed, and often community is better positioned to serve in those expert roles than some of us who have other titles and things like that. But along the lines of those essential capabilities for catalytic investors, they're looking for brand and communications power, which is again why some of us, like at the Ford Foundation or at Kresge or at the Rockefeller Foundation, really needs to prioritize investing in these types of projects, because we typically do have some brand and communications power to lean on. They look for reputation for impact integrity. They're thinking about extensive sourcing networks, right? How are you going to source the deals? Is always a question that comes up when you're talking to folk in private capital. They want to know about capital aggregation capabilities and capital flexibility. They want to know about private sector valuation expertise and private sector structuring experience. They want to know all of these things, which again, bends or leans toward there being or a need for some type of expertise because of the language that we're using. But again, these are all things that are easily handled with some education, with some investigation. And our theory is that community is very much possesses the skill sets, are experts who are qualified and capable of doing this work, of making investment decisions. We see that in the portfolio of work that we're supporting, from Real People's Fund to Boston Ujima Project to others that are in our portfolio for giving. And so as we think about bringing others along to invest in these GCEI type projects, we have to think about socializing the concept. And in order to socialize the concept, again, we have to think about how we're defining success, how we're going to measure that success, and how we're going to, quite frankly, tell the story about whether or not the needle is moving in one direction or the other, or being stagnant. And sometimes a stagnant needle is a win, and also being able to articulate or to explain that as we're bringing more people off of the sidelines onto the playing field, so that we can actually deploy capital that helps people to build wealth, create wealth for themselves, their families, and their communities.
Thank you, Greg. And on that, I imagine that there is a challenge that Nwamaka and Jeff, as well as Greg, might have seen in that it's one thing, especially if you have, some sort of a boss or somebody that you're accountable to within a philanthropic setup. It's one thing to say, oh, we created 100 jobs, we created 50 units of housing. It's a lot harder to measure. We created power and agency, we increased accountability by X. Is that still one of the challenges that you see, Nwamaka, for others perhaps that are your peers, not within Katali, or Jeff, having seen this for a while?
Yeah, I think this piece around how do we measure our success and impact, what I have observed is that over the years, social movements have continued to question philanthropy or challenge philanthropy on this piece around metrics. Because we could look to have 100 jobs created, but what's the quality of those jobs? Who's getting access to those jobs? Rather, you can actually go into community and get a sense of what is the feel, what is the connectedness, how are people engaging, how are people supporting each other? And so oftentimes the quantitative metrics that philanthropy puts on grassroots communities doesn't actually translate to the impact. It doesn't reflect the long-term work that goes into organizing, to building relationships, because we know it's actually the relationships that help to sustain us from one project to another, right? And so the relationship that Jeff and I had started working on democratizing capital East Bay, continuing to be with Real People's Fund, I continue to engage with Real People's Fund. It's that long-term relationship that allows us to get to a point now where we can see projects that others are ready to invest in. And so I think our ability to really be in direct relationship with those that are working on regenerative economic projects, working in the just transition space, will help us to understand, are they seeing a meaningful shift in impact based on what they have defined by their community? When they look at accountability, oftentimes we understand it only in punitive terms. We don't actually understand what it means to be in generative accountability with folks where we're able to lean on relationships to come into a conversation, to name where we're struggling and challenging or being challenged, and then to work through strategies to get through that together. And so I did see a question in the chat box around what is Kataly's strategy for accountability. I would say it is highly relational. And so for me, coming out of the work that I do with my work on restorative economics, already in my role in less than a year, I've had people actually that I've worked with in the past will give me a call and provide me with feedback that I find extremely helpful. We also have our Environmental Justice Resourcing Collective, once again, where we have 9 women who are actively in the EJ space who set the grant making decisions and the strategy for that program area. And so we are intentional about who we hire and how we go about supporting our team and maintaining those relationships of accountability. That also adds to our rigor and understanding around how the field is evolving, how it's shifting, and how it's changing. What I would say for us specifically at Katali and the Restorative Economies Fund is that we seek to support community-owned and community-governed projects that are rooted in social movements. And the reason that's part of our theory of change and the technology of what we resource is that we want to support community-owned projects because we want to be explicit about who is getting the financial returns, the investments, right, on the project. And we want to support groups of people, community members coming together to collectively own an asset together rather than continuing to prioritize and privilege wealth and returns to an individual. We think the governance piece is important because as we know, our democracy is under attack. And we also know that democracy is about being an active daily steward of our communities. And so the ability to have communities be in directly governing these community governed loan funds, these equitable economic development projects, these built environment projects, builds their capacity to then go and contest for power when they're engaging with elected officials, when they're engaging with corporate interests. And then the other piece around being rooted in social movements, ensuring that the ways that these projects, these initiatives are growing, are continuing to take their cues and also continuing to reinvest their resources back into the social movements, the indigenous-led, the Latinx-led, the immigrant movements, the Black Lives Matters movements that are the ones that are actually at the forefronts of pushing for so many of the systems that hurt and harm our communities. And so for us, when we see projects that are leaning into that community-owned, community-governed model and are continuing to be rooted in social movements and can articulate how we're building power, that is enough for us to actually say we want to see this project succeed and thrive. And to the pieces that Greg was speaking, we're really clear that the racial wealth gap is not just a gap in capital. It's a gap in access to knowledge, expertise, in networks. And so for us, we move resources, particularly grant dollars, to support the startup planning phase. We also provide general operating support because we know that projects will actually need that time to build up and strengthen their business model, and then providing the non-extractive investments. We specifically move debt investments and not equity because we want our projects to be wholly owned and wholly governed by that local community. And doing all of that over the long term as long-term patient capital is how we seek to support these projects. And so I think I got in on my words, but I'll pass it off to you, Jeff.
Thank you, Maca. Yeah, the question of whether we have the metrics to prove the concept that this kind of work is providing a right return on investment seems like the wrong question, right? Philanthropy often asks a lot of questions, but what we do know is all of the great work going on right now and the racial wealth divide is only growing, right? So if we don't come up with new solutions and new structures, then we see the trajectory, and the trajectory is not one that we care about. It's not one that the organizing grassroots groups, the frontline communities that we're trying to serve, want to see happen. So, I think all the projects that you hear mentioned on this call, the ones that Transform Finance have in the Grassroots Community Engagement Investing Handbook, all look to solving the issue and maybe not relying so much on metrics. And so when you listen to end users, what people need is smaller dollar investments, like Greg was saying. They need higher risk investments, longer runway investments. So the pool of investments is going to be a relatively high risk, relatively low return if it's non-extractive, and mission unproven, right? So if you try and bring that to the CIO of a foundation, that's not a great investment thesis. And if you bring it to a program officer, it's kind of convoluted. So over the years, in terms of problem solving, what we've tried to do is come up with integrated capital approaches, right? Which is what Katali, I think, Maca, you're saying the same too. And you bring that to the right person, right? So you've got your grant makers who are in for the long game on the infrastructure building. They might be in for the really deep patient capital, first loss money, so that then you can go to market, as Greg was saying, and scale and have a term sheet that's relatively secure, relatively predictable. And for us in the models that we have, we do use professional financial intermediaries as a risk mitigator and as a confidence builder. So that gets a little more at the nuts and bolts side of things, Andrea, and there's a lot of nuts and bolts, but when you stay with what the needs are of the community and then structure your project to meet those and bring that to well-intentioned people who are trying to close the racial wealth divide and say, look, if you're not ready to do this, if you're looking for an MRI that's an 8% return on investment, a simple signature on a term sheet that's ready to go, I don't believe you're going to be helping to solve the problem, because we see that from experience, not from any necessary theoretical basis. It's just a practical one.
Sorry, I just want to jump in. I don't know that I disagree with you about whether or not the framing of the question around like what is success, how do we measure it, whether it's useful. I do know that if we are going to bring along more private capital resources, right? When we think about what is the next step to have this adopted by more people, we are going to have to be able to competently describe the impact that we've had through these projects, right? And in some way, there has to be a measurement and evaluation, a research and learning framework that's attached to what we're doing, which is why the work that Transform Finance has done on producing a report and all of the great knowledge products and learning materials that the field of practice who's doing this, that they're producing is really, really important. Because again, at some point, we have to think about if this is successful, if this is shifting values around power and finance in communities, we do have to think about how we implement that in other places, whether by replication or scale. And the two primary ways that, the two glaring ways we can do that would be with public dollars through policy or through the markets and private financial dollars. And again, we can go back and forth about whether or not it's the right question to ask. I would just assert that it is, in fact, the question that is being asked that is preventing us from bringing more people onto the playing field to invest in these types of things, and that simply saying to them that you're asking the wrong question may not get us the result that we want from an organizing perspective.
Well, and I would
like
parse
this.
that out.
This is-
Just to,
Go
if
ahead,
I could just parse it out a little bit too, Greg, part of what I'm saying is retrospectively, right? We don't have a body of knowledge to convince those folks to come in. We just can't generate, everything is nascent. And so on a going forward basis, sure, as the field grows, but what we need right now is a lot of participation in field building. And I feel like people ask for a lot of details and assurances that we just, we're not ready to make until we build the field, and then we can test the thesis that it is truly a good return on investment. So yeah, I agree as well. Down the road to really scale, there'll have to be demonstrable metrics that people can come in on.
And maybe success isn't scale or replication, right? And that's what we're talking about now. I'm suggesting that we just have to be able to define what success is.
Yeah, I mean, I think that this is an important point for our field to wrestle with. I think that, yes, we want to be able to define what success looks like. I think the question of who gets to define that, right? Because for Katali, we are a learning and evaluation organization. We work with Sarah Pinto to create a theory of change for our foundation. And so we do lean into the need to assess impact. However, who gets to be the storyteller around what is impactful is part of where I think philanthropy has continued to hold the conversation, hold the power. And so when Jeff is talking about field building, what I know to be true is that us as philanthropy, we also need to be investing in building the field so that 10 years down the road, when we have another Boston Ujima that people are excited about, when we have another Seed Commons, another Real People's Fund, then those private investors can come in and stack on top of those loan loss reserve funds, those catalytic capital dollars that we've provided. But if we continue to tell the story and the narrative to speak directly to them in terms of number of jobs, number of training programs, it doesn't necessarily translate to what's happening on the ground. So we have an opportunity, I guess we could say, to really think about how we are framing evaluation and learning. And I think this is why the narrative strategy work that has been coming up from grassroots movements is also really exciting, really challenging philanthropy and pushing on mainstream media to question who the storytellers are and how those stories are being told.
Yeah, I think listen, I'm nodding vigorously. I tried to do my virtual hand clap on that because I think it goes back to the idea of centering community as the experts on what needs to happen in that place, right? So just really happy. I wanted to acknowledge that I'm completely aligned with that. And I also think that it just goes back to, so I just wanted to say I'm completely aligned on the idea of centering community as the experts, and this acknowledging that there are lots of things that philanthropy needs to do better. But the other point that I wanted to make just really quickly is that the other reason it's really important from my perspective to think about it this way is what I say to my team is all the time is that at some point in the next 3 to 5 years, we're going to have to make a responsible exit, right? Large national philanthropies, particularly the more progressive ones, tend to make 3 to 5 year commitments into place and then move to the next strategy, right? And so a part of my insistence on being able to have a narrative or a framing around this is what success looks like, this is what outcomes look like in the interim, even if it's a 10-year runway or a 20-year runway, right? To get to where we want to be, I think that we really have to spend the time together with community leading the process to understand what that is, so that we can articulate that, again, not in an effort to convince those of us who, if we're looking at a stakeholders analysis, are already allies and agree, but there's a whole body of people who are neutral or disagree with what we're saying, that we do have to think about what that narrative is and what the evidence is to our narrative that gets us from where we are to where we need and want to be.
Great. Sorry, go ahead, Nwamaka.
I just wanted to respond to something in the chat box before it goes up. There was a question around community governance and decision making, and I just think that this is an important question to lift up, particularly for our work at Katali. While I think it is important for foundations to be in direct relationship with their grantees, with grassroots communities, what I'm observing is the way that philanthropy will actually take grassroots leaders away from their important daily work to then come and tell us in philanthropy what to do. And so I would offer that one of the ways we're trying to solve for this dynamic with the Restorative Economies Fund is moving resources into community governed vehicles. So once again, the Real People's Fund, the Runway Project, the Ujima projects, because rather than controlling and centering the power and the authority within our own foundations, how are we actually moving the resources and decentralizing power out in the community, so the community then has the capacity and something that they can turn to from time and time again to be a vehicle to move resources. And so all that to say, I think, yes, foundations should figure out what their accountability mechanisms are and not center themselves, rather move resources into vehicles that are community governed, that challenge traditional banking and investing, where communities are making decisions how to reinvest those resources directly. I think we, at the Restorative Economies Fund, we've made a decision not to directly invest in enterprises or entrepreneurs and really focus on these community governed vehicles, because we think the community should actually be determining and be in relationship with those entrepreneurs who are the ones who are providing the good quality jobs and the goods and services in their community. So that's how we've taken it up within our foundation.
Oh, cool. This is all super rich. Thank you all. I appreciate the exchange, and thank you, Nwamaka, for lifting up the question from the chat. Want to make sure that we get to at least a few of those. If you all can stay on, the time is flying. There's one thing that that came across that I want to see if you all can also address and pick up whichever piece you want. One is on the pipeline issue. So several folks responded to the report from some of the major foundations saying, yes, this is great. We've heard of Ujima, we've heard of the Real People's Fund, but where is there a sufficient pipeline? And our point was like, well, it is being developed and you can play a role in developing it. But I'm wondering how you all have addressed that issue of, where are these projects? And the other piece that folks have been curious about is on the different instruments, and Nwamaka already addressed how they use debt instead of equity. How are you all thinking about when something is a grant versus a first loss pool of capital versus an equity or debt investment? Pick up whatever part you would like of all these, including all the great questions that are coming across in the chat. And Helen's point about risk also, and redefining risk. Good luck.
Well, I guess I'll jump in and just try and be as brief as possible to say that on the pipeline issue, it's a little bit easier for us to sometimes have this conversation with partners because of our deep experience in catalytic capital and having built this expertise over decades of deploying high impact PRIs and grants. And so it's easy enough for us to discuss like our differentiated sourcing using a pipeline of global social impact opportunities sourced through long-standing relationships and deep issue area engagement across our portfolio of work. I'll just say that we are mentioning portfolio. We take a portfolio approach to our investment strategy here, coupling PRIs and grant dollars. And again, I've talked a little bit about the 3 pillars of work on that: coalition building, contextual technical assistance, and actual capital provision for the small businesses. We see them both as necessary, but particularly on that third piece of our work, which is about sourcing those novel financing tools at under 250K solutions for the toughest to serve customers. We see that as much more of a granting space right now, because we see that right now as what we call like an innovation bucket. And just based on my previous comments, we want to have a little bit more evidence, proof, socialization of the concept as we go out to other partners to ask them to co-invest with us.
Yeah, I'm happy to jump in on the pipeline question, and I would lift up Indigenous communities have invited us to refer to it as waterways. I think specifically Vanessa Roanhorse from Native Women's Rising. For us, when Kataly launched in 2019, we already had a slate of projects that were already flourishing, and we were able to support and resource. What we also decided to do early on is be in relationship with those social movements and those organizations that we know had a curiosity and interest in exploring what this could mean as an added strategy for their work. So we made a commitment to provide 3-year general operating support grants for a number of projects that we're looking at, either assessing equitable economic development project, looking into creating a community governed loan fund, or just trying to understand and assess what their community's economic development needs were. And so we made a commitment to resource those efforts early on as part of the field building. I think we need to intentionally source the field in order to then have them be investment ready 5 or 7 years down the road. And this is also because, what we understand of the racial wealth gap is that these communities don't have access to the friends and family money, as Jessica Norwood refers to it. And so we have a responsibility to provide that friends and family capital, given just the way foundations are created in our tax structure. And for us, in terms of the types of terms that we look at, once again, we do provide, we focus on providing debt capital to preserve the community ownership and control over a particular project. And we come in on the catalytic side, always knowing that we'll provide a grant to support that project, because I haven't seen a deal yet where an organization or community hasn't needed a grant. But then we also typically move around 1 to 2%, depending on the pro forma of the project. And we have found our ability to be that first in, most catalytic funder is then what also supports some other PRIs coming in and other traditional investors as well. One of the things I would say that we have observed in partnering with some institutions, even those that are moving PRIs in their foundations, is that there's still a low risk tolerance. And I think Helen Chin had lifted this up in the chat box, in that even with the 2 or 3% interest rate that they're providing, they're expecting the project to provide 100% guarantee. And so what that means for us as the most subordinated investor in the stack is that there's a chance where the monies that we want to invest and circulate out in community could potentially go into another foundation. And we don't want that to happen. And so we always try to lean into, how can we partner with your institution to help give you enough security to come into the deal, but to also take on a little bit of financial risk, particularly when the communities are taking on the lived risk of what it means to not have these projects. And so we think that as projects are designing their capital stack, a funder organizing strategy, which was also named in the chat box, is for us as institutions who are values and mission aligned to come together and figure out, how do we make this deal work, both from a need of challenging our credit policies of our institution, but from a deep commitment to this project in particular. And so we're always looking for other investors and foundations that want to actually have that really intentional conversation about how to make the deal work for the project.
Yeah, I would just add briefly a couple of disparate comments. One is that, you know, it's always been my hope that there's a lot of people ready to move into the space who are fully informed and really understand the risk, but just don't know where to go, right? And so part of our work has been to try to develop projects to respond to those who are ready to go, more so than those who need to be convinced. And I think one of the great failings coming from Occupy is all of this interest in community investing and in higher risk, higher community outcome investing, and yet we haven't really been able to provide the facilities to move in multiple locations, right? And so part of the work Transform Finance did, aggregating 18 case studies. Also, if people look at National Community Capital Coalition's website, we put together a primer with them that's much more nuts and bolts, like, so you want to do this, but you don't want to start from square one, take a look. And all these are work that philanthropy can really help in, right? The collecting of the information as the field building is going on and sharing it, I think, is an important piece of work. Kurt, I don't know if you could share that in the chat box. I'm not capable of talking and copying and pasting into a chat box.
Yeah, we'll try to do that, or we can also do it in a follow-up email to the registrants. So I see that unfortunately we are over time. We used to do 90-minute webinar discussions, then we moved it to 60 because people were all zoomed out, and then it gets all, you know, juicy and rich, as Helen said in the chat, and then we cut it off. Give us a quick parting thought. How can Transform Finance help? How can your peers help? How can we step into that philanthropic organizing so that we continue building out this field? And then we'll let you go.
Yeah, I'll start us off and be really quickly. My final thought is that we have to trust community. No matter which seat we sit in the philanthropic sector, CSR, private foundation, community foundation, we have to trust the communities that we serve. They're the experts.
I co-sign that one, Greg. I would also add, for Transform Finance, the last report that you put out was really helpful for the field. So continuing to lift up the projects, the stories, and being able to talk about the prequel, all the pre-work that went into making the project happen, I think is how we can continue to build the field of work. So thank you so much for having me. Thank you, Greg. Thank you, Jeff.
Yep, and I would say, you know, to my colleagues, CFO, nuts and bolts people, you know, study the nuts and bolts so you don't have to make the mission subordinate to the return, right? I mean, just keep highlighting the mission, like Greg and Nwamaka are saying, highlight the community voice and what is needed to uplift community, and it can be figured out, right? That's the thesis, that there are ways to get positive returns to people and to do this work in a way that the mission outcome is the priority, not the income return.
Well, thank you all. This was fabulous. Sorry we went over a few minutes, but it was really, really great and very rich. Thanks to the participants. We will try to address as many of the questions as we can offline. We took a note of all of them. And yeah, here's to continuing to develop the space. And as Amaka said, lifting up all the amazing work that is happening across communities, not just in this country, but across the global South also. So thank you all. Looking forward to the next session. Please take a look at the website and sign up and join us for that as well, because this will keep on going. All right, take care. Thank you, Maca. Thank you, Greg. Thank you, Jeff. You've been great. Take care.